if I could come to the macroeconomy, inflation has been at record low. Growth is picking up. Government initiative from the fiscal side has supported growth. Taking all these things into consideration, where do you see RBI moving in terms of interest rate in the upcoming policy season?
Inflation, of course, has been historically, in the recent times, we haven't seen that kind of softer inflation rates. Coupled with the good growth rates, in fact, our internal house view is that the Q2 would be around 7.5, which means that the exit GDP rate for the current financial year would be around 7. So, while rate cut in the December is a close call from a RBI perspective, because the low inflation everybody will ask for some kind of rate cut coming up, but the higher growth rate also poses some sort of communication challenge for the RBI. So when the higher growth rate is there, how is that rate cut is undertaken? But the softer inflation indicates that there is a room for rate cut.
And with the rate cut comes a fear of, some sort of pressure on the margin for the banks. You have been consistent, you have been maintaining an NIM of over 3%. But this rate cut, will it put pressure on your NIM?
So
you are trying to balance this?
Yeah, so our house view is that, first of all, December rate cut, as I mentioned, is a close call. Before these inflation numbers were announced, and our house call was that there are not going to be any rate cut till February. Okay, and if it is upfronted, if it were February, I don't think there would have been any impact on the margins. It's just about a month, or a month and a fortnight would have not made any major impact. But if December rate cut is there, but our house view again is that it would be a shallow rate cut of 25 basis point. So it may not have any significant impact on the margins. There are a lot of levers available to us in terms of, the full benefit of CRR cut will be available by 30th November. That means you have at least 4 months of additional CRR benefit which is coming in. Number 2, the repricing of fixed deposits, which normally takes 12 to 16 months, is this quarter also a lot of repricing will happen. So the repricing of fixed deposit and the benefit of the savings bank, rate moderation, what we have done, the CRR benefit, all these things are likely to help us in terms of moderating the cost of resources. If you've seen our Q2 numbers, we have managed our liabilities very well. In fact, the NIM upgrade what you have seen in Q2 is essentially came from the resource moderation, resource cost moderation, both on the deposit side as well as market borrowing side. On the asset side, we have a comfortable position because our repo linked loans are just about 30%. So while we have to immediately pass on that benefit if there is a rate cut, the other book is not immediately repriced. So we get so many levers are available, and I'm reiterating what I said earlier also, that my exit NIM for Q4 would be above 3.
So you are hopeful of maintaining 3%?
Maintaining 3%.